Welcome back to Next Gen Investing. It's now time for FOMO. So joining me to discuss Tesla, because where else could we leave it on a Friday, is Kevin Green, Senior Markets Correspondent for the network, as well as Diane King Hall. Kevin, where to begin? I feel as though with Tesla, it is at a special pain point because there's so much focus on this name, and regardless of which way it moves. And I feel like once we get downbeat in Tesla, it's like we pile on. Same things to be said when we move to the upside, but all of that election euphoria given back, I will say maybe on a point of optimism, though, is that we're still well above lows that we were at just a year ago.
Yeah, and if you actually look at a chart since pretty much March, we've been trading in a range. It hasn't, it doesn't really look like some of these other charts where you're just seeing a massive flush to the downside. Now, a lot of the price action is obviously reflecting some of the fundamentals of the company when it comes to lackluster car sales, maybe a little bit of politics being thrown in there as well. And then I think the market's really just trying to see what's the next best thing when it comes to Tesla's product roadmap moving forward and how they're going to navigate some of this tariff battle. Now, obviously, the news that's hitting the headlines today, the China tariffs, the retaliatory tariffs, they're increasing their tariffs by 34%, can have an impact on Tesla. Tesla's revenue, when you're looking at China, is around 22 to 25% of their overall revenue mix. So it can have an impact here. And I think the biggest impact that we have to really kind of focus on, though, is really the electronics as well as the batteries. And that's really probably going to be the areas that actually Tesla's going to be maybe seeing a little bit of pressure here. Now, they can look for domestic sourcing here in the United States. That could be possible. And we already know that Tesla manufactures a lot of their vehicles here in the United States. All of them, actually, the ones that are sold in the United States are manufactured here, even though the components might be sourced from other areas. So we're seeing the shares down 10% today. I would say, though, the equity market itself down 5% right now, so kind of have to discount it. But when you look at the chart, it's holding up for now. Maybe a lot of the damage has been done. Maybe we're finding an area of support. This also could be a bear flag where we continue to flush to the downside here. But a lot of negative news has been priced in on the stock since the highs that we saw late last year going into this year.
KG, I'm sure you saw this. JP Morgan Chase lowering their projections on what earnings will look like for Tesla. They're projecting that they're going to come in at 36 cents a share. So that would be down from their previous projection and lower than kind of what the consensus view has been. How should we interpret that?
Well, I think the market as a whole, when you're looking at analyst expectations, they're re-rating almost everything, but especially for Tesla, re-rating to the downside. Production numbers, delivery numbers, top line, as well as adjusted earnings per share. And I think if you make the case that profitability is going to get squeezed because of these tariffs, I think that's a valid argument. But once again, this is a company that not only has the car exposure, which it really doesn't want to be called a car company anymore, but that's what they make money on right now, trying to bridge the gap over into artificial intelligence, humanoid robots, robo-taxis, and things of that nature. For Tesla long-term goals, this is a means to an end, but you can't have the means that get you to that end being impacted, right? And I think that's where the market's a little bit skittish. I think you're also seeing maybe some investors really wanting to see Elon a little bit more involved when it comes to the company. He did an all hands meeting, 3 weeks ago, stock popped like 6% on an intraday basis. That's really what they want to see. So eventually he will come back and be a little bit more of a force. And I think even just that transition, that timeline probably would be overall bullish for the shares here. But Tesla is not outside of the fray of getting hit by this broader equity market sell-off. And we just have to be mindful of that.
Yeah, and that was always the most confusing thing to me ahead of the election was we saw this massive narrative start funneling in the market that was like Tesla will be immune from some of these tariffs and immune from some of the woes that will weigh on the rest of the EVs. And I didn't understand that. Even when you look at the fact that this company is, yes, very much U.S. dominant for manufacturing. It manufactures all its vehicles, of course, that are made here for here. But then I was looking at the parts, and this is an interesting component because it's hard to find, but it's roughly like 60 to 70% on each of its vehicle has parts from the U.S., but then that's another 35 to 30% coming from overseas. So I don't know how this could possibly have been tariff proof. Even Elon Musk was making the argument that, yes, we expect a hit from this.
Yeah, well, really good context there, Jenny. The 30% that you're talking about are the critical components for their vehicles. And that's where it becomes a little bit of an issue, where they're sourcing for the computer chips, And then also, once again, the batteries. The lithium is really prevalent in China because they actually have the operations in order to refine it and package it up. And so that's something that we just don't have an advantage here in the United States. We have to be mindful of that. But overall, I'm right there with you. I think there is a benefit, though. I do want to kind of take this other side here real quick. The EV tax credits being cut is a Tesla is a direct beneficiary of that. It's going to make it a lot harder for their competitors to be able to get to profitability without those tax credits. And that, I think, is one of the narratives that we saw for the election bump to the upside. And that is true, right? He probably did have an influence on that.
KG, I want to go back to the point that you made about him showing up at that all-hands meeting and how that was perceived. There are reports that he will likely step away from Doge sooner rather than later. Do you think that shareholders would, or that could incite some appreciation for shares with him, kind of coming back to his role full time?
Yeah, well, I think the White House did deny that report, and I think Elon posted a meme or something, or said that it was fake news. But even then, because the shares were up like 6%, even after refuting that news story, the stock was still stabilized to the upside. So I think you're right there, right? At some point, once we kind of get closer and closer where he comes back, I think the market's going to be very excited about that, even though maybe those news reports may not be true, and who knows, right? We don't know. But I think they would be very excited for that. And maybe Elon's time in the White House may be coming closer to an end rather than a beginning, right? The start of a longer stint.
Yeah, and I think that's a good point. And the Doge news was so funny to me because shares popped on that, and that just shows how much investors so desperately are seeking this man's guidance again. I don't really know if it'll make a difference. I think there's some broader forces at hand, but nonetheless, definitely at least seen as maybe some clarity that we want from Elon Musk. But we so appreciate it. A name that has been definitely the point of conversation every single day this week. Tesla, of course. Kevin Green, thank you so much for joining us today.